Hey guys, welcome back to a brand new video. I'm RexFinance, and today was supposed to be a big day for PayPal stock because it was the innovation day that we've been waiting on for a long time that was supposed to shock the world. And instead we got reactions like this, and this. And actually my favorite reaction came from Josh Brown on CNBC, which I'll play really quickly here.
Mr. Shareholder, learning about this in real time.
Yeah, it's the stupidest thing I've ever seen. It looks like market manipulation, but nobody wins. So why would you come out and say we're going to rock your world or whatever he said, and then the big innovation is we're not investing in this, we're still cost cutting, but look, we're going to do a faster checkout? That's like table stakes. You have to have a faster check. We all understand that. There's nothing here. They should. I don't know. I'm not impressed by so far. It's a new CEO. Give them the benefit of the doubt. They report on February 7th. Maybe they will rock our world then. But like this is not what's popping in the streets. Like we don't roll like this.
And when I say the markets didn't like this event at all, I'll just show you the stock chart here. Okay, so prior to the event, the stock was trading at around $64 per share. And as soon as the event started, the stock price cratered 6.5%. And as I'm recording this video, the stock is still down about 6% from the start of this event. Now, in today's video, we're going to think about this logically. For example, is PayPal really a 6% worse company because of these announcements? I think not, so I'll go through that, also my price target spreadsheet, what's changed there, etc. If you guys are new here or returning and not yet subscribed, please subscribe down below. We have the best community on YouTube, and you have the chance to join it for free, so just hit the subscribe button. But I just have to say, the CEO, Alex Chriss, which by the way, he's only been the CEO for about 6 months, I don't think he had a fair shot at this at all, because the reporting on what he said in a CNBC interview was terribly misleading by so many respected individuals on Twitter. And I actually called this out a couple days ago. I'll go to this tweet here. I said, caution PayPal investors, Alex Chriss did not say he would shock the world on January 25th, as the Newswire has repeatedly stated. I quoted an Unusual Whales tweet that said, PayPal CEO said he would shock the world on January 25th, but that's not at all what he said. So honestly, Alex Chriss did not get a fair shake at this, so I'm going to give him a pass.
There hasn't been a lot to celebrate over the last few years. I think innovation's been slow. The company's been growing, but hasn't been putting out real customer-backed innovation, and that's why I'm here. That's why I'm so excited about it going forward. So look, I love being an underdog. I will take all of that feedback, and we'll shock the world.
Instead, shocking the world should be thought of as a longer-term plan rather than a singular catalyst. And I still expected big things to happen today, and they did, and I'll go through those. But yeah, this was just not fair reporting for Alex Chriss, this new CEO, at all. But honestly, I don't know if I should give him a break because he totally egoed me the other day. I messaged him asking him to come on my channel for a YouTube interview, and this was his response. If I can pull this up, I'm a YouTuber and I don't know how to use YouTube. All right, I'm just going to put it up on the screen because evidently I'm too dumb and I'm only 22 years old and I can't use technology. But he said, thanks for reaching out, Ben, and congrats on the growth of your business. I'm focused right now on the team, our customers, and accelerating the business and not doing longer interviews, but I appreciate your asking. Have a great day. So, I've decided 365 days from now, I will re-ask him to come on my channel for an interview, at which point I should be able to ego him because my channel will be a lot bigger, hopefully, and I can say, sorry, I don't do longer interviews. No, but honestly, I give him a lot of respect for even responding to me, so everything I just said was a complete joke. I'm not going to ego him, but I will ask him again a year from now if he wants to come on my channel for an interview, because I think that'd be pretty cool. But anyways, here are some comments that I've been getting about PayPal stock, which are just blowing my mind. Scratch Off says PayPal is a dumpster fire. I would pull out unless Elon buys it. I mean, who are we kidding? I feel like we've forgotten how to invest. PayPal is an undervalued company when you look at it from any aspect. And I'll show you my valuation at the end of this video. But are we really going to call it a dumpster fire and say we should sell because it's down today after these announcements? I don't know about this. And then on X, somebody replied to me and said, LOL, what? How can you be a happy shareholder? This stock can't trade above 200 moving average in a very long time. My answer was, I don't care. I've done the research and analysis required to know that the company is very undervalued right now. I'm a patient investor. The lower it stays, the more I can buy. And he says, sounds like a bag holder. And I told him, yeah, my cost base is around $67. I'm happy to be down on my investment. And he said, LOL. Yes, everyone likes being down on their investments. Good luck. We've lost this as investors. People have it so backwards in their head. Of course, as an investor, I want stock prices to go down in companies that I believe are undervalued so that I can buy more. I mean, that's totally the Warren Buffett philosophy, and that's the only philosophy that's ever worked in the stock market. So people have this so backwards right now. I don't know what my point here is. I just wanted to put it in the video. But here, I'll go through the announcements that PayPal made today as quickly as I can before we dive into my price target spreadsheet. But I think these are very important things to note because contrary to what the market is saying right now, these are some very, very good changes and announcements from a CEO that's been in place for less than 6 months. But the first announcement was Fastlane, which reduces friction when you're checking out. Let's listen to Alex Chris explain this.
So, we have massively accelerated the checkout process because that's what our customers expect. Just log in with your face or fingerprint, and in one tap, you're good to go.
That is the most important thing. One tap, and you're good to go. You'll hear Alex Chris talk about this repeatedly throughout this announcement video. One tap, reducing friction at checkout for consumers. You'll see him give examples of when you pair PayPal's checkout experience with different companies, how the conversion rate goes way up, upwards of 70%. 7 out of 10 customers fulfilling that checkout and buying something.
We call it Fastlane by PayPal. It couldn't be simpler. Save your information with Fastlane to check out in as little as one tap. No username or password to remember. No personal info to update. No need to share a credit card with businesses all over the web. PayPal recognizes you.
This is absolutely huge. If PayPal can reduce the friction of checkouts, more and more merchants are going to choose to work with PayPal, which means PayPal's revenues go up, their profits go up, and their share price should also go up.
Merchants want to incentivize customers to come back, and consumers want to find the best deals. So we're eliminating the guesswork for both. When you shop with PayPal, we'll send a receipt that not only allows you to track your purchase, but also harness AI to predict what you may want next from that merchant.
This is another big deal. I think this is a really, really good announcement where in the receipt you get from PayPal in your email, they will start including recommendations for future purchases and they'll give you cash back. Again, this is a really simple addition to the PayPal experience, and this will also increase sales and margins and hopefully the stock price.
And to top it all off, money matters. Everyone is feeling the inflationary pinch and looking for ways to spend smarter, finding the best prices, the best deals, and how to save more money. That's why we're reinventing the PayPal app to give our loyal customers even more reasons to shop and pay with PayPal.
More sales, more profits, higher share price.
Starting this quarter, the new PayPal app will give US-based customers access to hundreds of exciting, personalized cashback offers from top brands in the US. When you see an offer you like, you just tap on it. And when you shop with that business, the deal automatically applies when you check out with PayPal.
Did you hear that? Again, he said one tap. All of these announcements have to do with reducing friction for customers and consumers, and I think they're very, very good changes. He even gives an example in this product demo, if you want to call it that, where you get 5% cash back at Walmart. You can get an additional 3% cash back if you use your PayPal debit card. So you get 8% cash back, which is a lot of money on groceries. And if you do that throughout the year and invest the money you get back in their high yield savings account, you're putting more than $800 back in your pockets as a consumer. That is a value proposition that consumers won't be able to turn down. And again, it all has to do with convenience. It's one button. There is very little friction to doing this. And then lastly, Alex Chriss announces changes to the Venmo business profiles.
Introducing our enhanced Venmo business profiles. We are offering an entirely new way to use Venmo to get on someone's radar and grow your business. First, we're adding a subscribe button wherever you appear in the feed. Now, every time a customer pays you, they're also giving you a chance to gain subscribers because their friends, neighbors, and the local community will see you. Second, we're going to enable small businesses to leverage this exposure to potential customers close by and offer them cashback deals in seconds. That's real-time marketing for your business on a hyper-local level.
So again, I ask, let's think logically here. What about these changes and announcements makes PayPal a 6% less valuable company? The market is very irrational right now, which is when investors like me like to step in to take advantage of it. I've said it many times in this video already, but these changes are going to directly increase sales and profit margins, which will have an effect on the share price. What is not good about that? The entire reason for this downturn is because there was a misconception that Alex Chriss was going to make an announcement that would shock the world today, where that was just very misleading reporting. But again, this just presents another buying opportunity for somebody like me, so I'm not that butthurt about this. So let's talk about this valuation. This spreadsheet is made available to all my paid monthly members. My membership helps me avoid all of these dumb sponsorships that all these other YouTube channels take. I don't do that. I am fully self-funded, so if you want to join my membership and get access to a bunch of different perks while also supporting me, hit the join button located right next to the subscribe button or hit my Patreon link in the pinned comment. I greatly appreciate it. Again, we have the best community on YouTube. I have no doubt about it. But let's talk about this. This is my conservative price target here, where I assume a 3% recurring share buyback, a 3% annual reduction in the shares outstanding, because PayPal is a very profitable business and they've been buying back their outstanding shares like crazy because they too think their stock is undervalued right now. Based on this, my price target for 2026, and these are forward-looking numbers, so by the end of 2025, I think the conservative fair value for PayPal stock is $193.69. That means that over the course of just the next 2 years, over the next 24 months, I expect PayPal stock to return me over 200%, 221%. It is very rare you get opportunities like this. If you want my opinion, I actually believe that PayPal stock should trade at a forward PE multiple of 30 rather than a 25. And if that's the case, then my price target goes from $193 to $232. You can see in this spreadsheet that analysts expect PayPal's revenues to grow by 8.4% this year, 8.75% in 2025, and then 7.59% in 2026. I think these are very, very low ball numbers. I think PayPal is going to get back to double-digit revenue growth. All they need to happen is for global transaction volume to increase for their revenue numbers to go up. And obviously, online transaction volumes are going up and they'll continue to go up. This is a huge industry, and PayPal already has built a loyal customer base, and they are the trusted name in the industry. That is a huge thing that takes years and years and years to build. So this year in 2024, I actually have the company growing revenues 10.4%. Next year, I have them growing revenues close to 11%, and in 2026, I have them growing revenues close to 12%. Through all of this, I expect their net income to go up by $1.5 billion essentially every single year, which increases their earnings per share from $4.80 in 2023. We're still waiting on Q4 numbers for that. I'll update this with actual numbers, but this is my estimation. I believe we'll go from $4.80 today earnings per share to $9.55 earnings per share over the course of 2 years. And again, I remind you, this is my more conservative bullish thesis. In a perfect case scenario, I actually think PayPal stock could hit $300 plus by the end of 2026. Now, obviously with the stock market, there's things I can't control. Sure, PayPal's undervalued right now, but what happens if we do have a global recession in 2025? well, then it kind of renders this spreadsheet useless. There's just too many events out there to predict, so I continue to choose to put most of my money in shares of the company rather than call options, but the lower the share price is for the longer amount of time, I get more and more tempted to start buying call options again. I own a handful of December 2025 call options. I might add to those. I might buy some January 2025 call options. I'll keep my members updated in the Discord server. If we look at my Blue Angels implied price, you can see that right now a 20 forward PE, which would be low for PayPal, means PayPal should be at $112.87. Right now we're at less than $61. This was as the most recent time I updated this spreadsheet. The stock was at $61. Right now the forward PE multiple on PayPal is an 11 or 12. Based on my estimations, it's more like a 9 to 10, but based on Wall Street projections, it's an 11 or 12. But regardless, whether my numbers are correct or wrong, or whether Wall Street's numbers are correct or wrong, a company that's growing revenues at 10% every single year while increasing their profit margins and their net income every single year should not be trading at an 11 or 12 forward PE multiple. Right now, the stock is priced for literally 0% growth. And that's a value proposition that I as an investor can't pass up on. Now, maybe some of you will call me crazy for being happy that the share price is down, but I am happy. I get to buy more equity in a company that I love and I believe is undervalued. And that's just simply what I do on this YouTube channel. I don't care what other people think. If something is undervalued, in my opinion, I'm going to be buying that stock, and if it goes lower, I will be buying more of that stock. It's very simple. If you're not yet a subscriber, again, don't forget to subscribe down below. I would love to have you join the community. Also comment down below if you're a PayPal shareholder, if you own some call options. I want to know. Share that down below in the comment section. With that, have a great rest of your day. Keep 10 toes to the ground and your chin up. Stay blessed. Peace out.